happened. What is this Reddit versus Wall Street issue that has unfolded in the last couple of days?
Well, I think it can be summed up in two things. It was a mathematical problem that morphed into basically a social movement, where you had a hedge fund who had shorted over 100% of the float of a stock. So a float of a particular stock is how many shares are out there in the market that can be sold and bought. And GameStop had been shorted at the peak 142%. So a hedge fund was placing bets on GameStop that it would go down. And it was at 139%. So basically they're shorting more stocks that are out there in the free market. And somebody at Reddit discovered that. And there's a lot of smart people on there. They discovered that. And what they decided to do was start buying the stock. So when you're short, it's supply and demand. It's like going to Costco and buying toilet paper 4 months ago. If there's no toilet paper there and they get a couple bags in there, the price goes up. But what happened with the hedge fund is the shorts, they had shorted the stock, and as the stock price started ticking up, they had to cover those short sells. So the hedge fund was essentially selling short out of its savings account and then having to buy those stocks back from its checking account. So it was basically a self-perpetuating snowball that was basically they had caused themselves. Somebody at Reddit had noticed that and said, "Hey, here's what we can do. We can start buying stock." And what that does is it accelerates the snowball and makes it bigger because they have to produce those shares when a retail investor starts buying it, thus causing the price to go up.
But why? Why do that? What's the point of accelerating this whole thing? Why would we want to drive the price of the stocks up and stick it to the hedge fund?
Well, that's been the common theme since 2008. I mean, if you look at the feeds off of Reddit, you know, all the people that are investing on there, they're investing $600, $1,000, and the stories you read on there are people, you know, I'm making a broad generalization, but they say, you know, it's the millennials against the boomers, you know. And if you look at all the people that are on Reddit and what they're saying and what they're selling, these are all young kids, and I use that term relatively compared to us, that are in their early 20s who in 2008 were in middle school or grade school, and their parents lost their homes and their businesses and everything from the financial crisis. And when that dust settled, they were out of their house and they were financially ruined. And what happened to the banks? They were bailed out by the US, and they just kept on going. So they saw an opportunity there to punish the hedge fund, where they would have to cover their shorts. And you have people on Robinhood that are investing, you know, $600, $2,000, $4,000, which is their entire net worth, and they're waking up 4 days later with $20,000 in their bank account. And if you look at some of the stories, and some of them may be anecdotal, but you get stories in there about people wanting to get surgery for their dog, or they wanted to go do something else or get something repaired on their car. You know, taking $600 and turning it into $4,000 in a matter of 2 days is a significant win for the little guy.